Hello everybody, in this video I'm going to be showing all of the different stocks in my Robinhood portfolio and showing my average cost and giving my opinion on the stocks if I'll be buying more and giving a lot of insight into some different industries. Here you can see I've invested about $9,500 and I started investing just under a year ago, or it may have just hit about a year, and I was up about 14% before a few months ago, and then it dipped down all the way to below negative 25%, and I've finally come back up and surpassed break even to about plus 5% after close today. For each of the stocks, I'm going to be showing the 1-year chart and then my average cost, and I'm also going to talk a little bit about each of them. The first one and my biggest position on Robinhood is Tesla. I'm a huge bull for Tesla, and I really believe in everything they're doing, and I will probably continue to add shares for many years to come. Right now, I only have 2 shares, and I have it at an average cost of $653. I originally had 1.43 shares on stash, which was fractional shares at an average cost of $240, and then I sold at $500 because I just could not believe that it was going up so high so quickly, and obviously I really regret that, and I ended up buying back in on Robinhood at a much higher cost. Next up is Mastercard. I believe it's my second biggest position, and Mastercard and Visa basically have a duopoly in the United States right now, except for maybe PayPal, I guess, but that's kind of a different story. But for what they do, it's basically just Mastercard and Visa, and Mastercard is growing much more quickly, and they've had some extremely great growth, especially in the last 5 years, but that doesn't really show for this chart, but below the huge dip, it was up 271%. I just have a couple of shares. I got my first share at a much better price, and then I got another one for about $280, and this is about 8% of my portfolio. As I continue to go down the list, a couple of them are just 1 or 2 percentage points of my portfolio. Some may say I'm overly diversified, and that's completely okay with me. It is probably better to have just a handful of investments that you really believe in, but there's so many different companies out there that I look at that I just can't help myself sometimes. I also have 1 share of Visa. I kind of regret buying into this one. I really wish I had just bought another share of Mastercard. But I do have 1 share of Visa at an average cost of about $204. Next up is Microsoft. I have a few shares of this one, and this is another one similarly to Tesla that I'll keep adding on to for really, really long-term growth, but this is obviously a much safer investment and one I'm just as big of a believer in. I only have 3 shares of this one right now at an average cost of a little under $160, and this is also one I hope to continue buying into, and I'm probably going to buy a couple of more shares just in the next couple of weeks here. Next up is Disney. They've had a really terrible last few months with their parks closing, and Disney Plus not doing quite as well against Netflix, which has been doing incredible in the last couple of months as they had originally hoped. And I've got 4 shares of this one with an average cost of $124. I actually thought that was a little bit lower because I bought a couple of those shares in the 90s, but I think I had the other 2 shares from before the stock went down at all, so that definitely brings my average cost up quite a bit. I think I bought the original 2 shares when Disney Plus first came out, and I thought they were going to get a huge percentage of Netflix's market cap, but that didn't really end up quite happening like I thought it would. Next up is Alibaba. You're probably familiar with this one. It's the biggest e-commerce player in China. They're going to be doing an 8-to-1 stock split in July, I believe, so I'm really looking forward to that because my 2 shares are going to turn into 16 shares, and I think we're going to see a pretty good surge in the stock price after that as well. Next up is a company many people are very skeptical of, which is Uber. They're in a pretty heavily competed in space, and they had a terrible IPO. I like a lot about Uber. They buy companies when they can, and they do a lot of expansion into companies all over the world. I think it's long-term going to be a really good investment, and they think they're going to be profitable within the next year. And even if they're not, it's still going to be a long-term investment for me, and they're going to get there eventually. I have 8 shares at an average cost of $30, which is much, much higher than I like it. But again, I started investing in this one before the market made its huge slump in the last couple of months. Next up is Salesforce, which has not had quite as good of a year as they have in the last few years. This is a stock I invested in pretty early on this portfolio along with PayPal, and I don't feel as strongly about it as I originally did, but Salesforce is one of the biggest players in big data out there, and I think that's going to be continuing to grow. I have just the one share at $153, and this isn't something I really see myself adding any shares to, but I don't really see any reason to sell it either. It's just kind of a long-term hold sitting in my portfolio. Next up is Take-Two Interactive, currently at about $135, which is right around their all-time high that they hit in the last couple of weeks. This is one of the biggest video game players out there, along with EA and Activision. They make games like Red Dead Redemption and Grand Theft Auto. They only release these big titles every 4, 5, or even 6 years, but when they do release them, these games are near perfection, and the company does really, really well with them. And I have just a couple of shares at $112, but I am definitely going to continue to add to this very soon, along with Microsoft. Speaking of Activision, I have just a couple of shares of them. They're also near their all-time high at $70, and they've had a really incredible year as they've become more and more involved in mobile gaming. Yeah, just a couple of shares of these. Not much of my portfolio is in here, and I'll probably add a few shares to this eventually if there is some nice pullback with this stock. Next up is PayPal, also near their all-time high. I think in the last couple of months, a lot more people have been using PayPal than ever before, just because of social distancing and whatnot. And this obviously won't have an immediate effect on the stock, but I originally actually bought this because I found out Venmo was owned by PayPal, and I saw a lot of growth there with Venmo. As college-age people grow older, they're going to continue to use Venmo, and then as people come into college, they're going to use Venmo as well, so the user base is just going to continue to grow and grow. But yeah, just a pretty similar situation here to Salesforce. Probably just going to hold on to this one for a while without really planning to add shares or sell. Next up is Tencent, currently at about $53.50. They're involved in a lot of different things in Asia, but they're mainly an e-commerce player. I have just a couple of shares at an average cost of $40, and just for a fun fact, they also have a 5% stake in the video game company Ubisoft, which is a private company, which I thought was pretty interesting, and actually part of the reason I picked up a couple of shares. Next up is Airbus. This stock was close to $50 just 6 months ago, and they've had a really terrible few months, going down to as low as $12 or $13. My average cost on this one is much higher than I like, and it's actually a little bit surprising because I thought I picked up several shares when it was just at $12 or $13 there, but I guess I had some 5 or 6 shares before the stock really started to decline, so that's a little bit unfortunate. But I do fully expect this stock to really double in the next couple of years as they get over this slump. Next up is Carnival, which is pretty controversial. There's only 3 really big players for cruise lines in the US at least, and that's Norwegian, Royal Caribbean, and Carnival. Many people are saying they're going to go bankrupt. I think the risk of that is pretty slim. There are many people saying that people are not going to want to go cruising for 2 or 3 years, and I would disagree with that. They've had tons and tons of bookings across all 3 of the major cruise lines that I mentioned. And that's just for this year. But again, average cost higher than I'd like it because I had a few shares before it really started to decline. So average cost of about $27 with 13 shares. And I do think this will double in less than 2 years for me. And as I just mentioned, is Royal Caribbean. I have both Carnival and Royal Caribbean with a slightly larger stake in Royal Caribbean. I think both of these are the safer bet than Norwegian. Average cost here of about $65. A little bit better than Carnival, but not by much. And I actually have 8.07 shares here because Robinhood automatically turned on the DRIP reinvestment fund, which I really didn't want for my dividends, but I just turned that off for all of my stocks, but that's why I have the fractional share there. But I'm already at only minus 15% here, so I think that's going to be positive within the next month or maybe 2. Next up is Moat, which is actually an ETF that invests into different companies with economic moats. Very simply put, these are companies that cannot easily be competed against, maybe because of a patent on a pharmaceutical or because of a really strong brand. I have just 3 shares of this one at an average cost of $54, and this one sort of resembles an S&P 500 fund, but I actually think this one is better. I actually was invested in VOOG, which just matches the S&P 500, but I sold that one, and I think this ETF is a little bit better. Advanced Micro Devices saw a small dip in the last few months, but has had an incredible return really for years. I invested in just a couple of shares on Stash, which is the other brokerage that really just specializes in fractional shares. But I also have a few shares here on Robinhood as well, and I really wish I had bought into more when it was much lower, as does everyone, but I really saw how well it could have been early on, and now that Microsoft is going to be using them in the next Xbox, I'm sure there's going to be really great long-term growth as they have that great relationship with the largest market cap company in the world. Next up is CRISPR, which has had a really great year. They're one of the biggest players, probably the biggest actually, in gene editing. I think this could be a really great long-term investment, but I want to look a little bit more into their financials and top management before I really build up this position. Right now I only have a couple of shares at an average cost of $53.74. This one is Vertex Pharmaceuticals, which is trading for just under $780. And this is actually not related to COVID whatsoever. They've been doing really, really well financially for at least the last few years. And they basically have an economic moat for the pharmaceuticals or treatments for cystic fibrosis. And I just have one share at an average cost of $230, and I'm already seeing a pretty decent return on this one. This one is Virgin Galactic Holdings. If you're not familiar with it, they're sending people who want to go up into space for $250,000, and they really haven't made any money yet, and they're in a ton of debt. And to be completely honest with you, I kind of just hopped on the hype train with this one. I have a pretty small position in this one, and I wouldn't mind adding to it more over time if their profitability can improve drastically. But yeah, just an average cost of $18 on this one with 9 shares. I really don't normally invest into these kinds of companies, but I did see the potential for a really good long-term play. Next up is Boeing. They're having a really terrible year, actually, not even just in the last few months. They're having all kinds of problems with debt as well as top management. A lot of people are saying they're going to go bankrupt, even if it is just for a restructuring kind of deal. But I really don't even see that happening unless the US government were to acquire them or something crazy like that. But just a couple of shares with this one at an average cost of $103. And I actually got my first share of them at $91. And I really wish I had bought more into it because I bought into that just getting the one share when the stock price had just about bottomed out. So even though I'm already up 51% on this one in just a short period of time, it could have been a much, much better return. Next up are a couple of investments I actually regret getting into. This one is New Residential Investment. It's one of the most popular, really high dividend yield stocks out there. It's currently trading at under $8, and it's traditionally traded at over $15. Luckily, I only have 10 shares at an average cost of $15.55, and it could have been much worse if I had been willing to go bet a little bit more into that, and I was just really attracted to the high dividend. But luckily, I really don't invest more than just a couple of $100 unless I do a lot of research into the company or I'm just a really huge believer in the company like Tesla. Similarly, and even worse, probably is New York Mortgage Trust. Here's actually the 5-year chart for New York Mortgage Trust, and as you can see, for really the last few years, it's had an extremely steady stock price, which was extremely attractive to me, and they really didn't miss any dividend payments. Really, for 3 years, they stayed extremely close to about $6.15, and I got my 18 shares at $6.13, and then just a couple of months ago, went all the way down to $1. So I'm going to hold on to both of these companies until I can get a better return. I don't think they're going to go bankrupt, but then again, I really don't know a ton about them, to be honest. So it is a possibility, but yeah, I'm just going to hold out until I get a better return on these. Last but not least, this is one of my favorite recent investments. It's JETS, ticker symbol JETS. It's another ETF. This invests into a lot of different U.S. airlines as well as a really small position in some global airlines. I just started investing in them about a month and a half ago, and I'm just been buying 5 or 6 shares here and there, and I'm up to 27 shares now with an average cost of $12.60. And as you can see at the bottom there, I'm already seeing a really strong return at plus 28%. I actually had another limit order for 12 shares, I believe, but at the beginning of the week, the stock has just been doing really incredible, so I don't think that's going to end up going through. And with how well it's done in the last week, I'm not really sure if I'm going to be adding some more shares. Sorry if I missed a few things in there. I was going pretty quickly. If you do have any questions, please do let me know down in the comments. I have actually done videos on most of the stocks that I did mention in this video, so be sure to come and check those out. Subscribe for more content, and thank you so much for watching.